Welcome to this week's Fund Manager Profile. Today we're catching up with PM Capital, who says 98% of Australian investors invest their funds onshore, while they could be getting a better risk return offering overseas. Here's Chief Investment Officer of the group with more.
You're not going to be a successful investor if you're buying everything that other people own. You've got to be doing something different.
Paul Moore says PM's been focusing on buying into two different alternative areas of late. One is US alternative investments, which offers a great investment opportunity.
The reason they caught our eye is from peak to trough, the stocks fell down about 75%, so it obviously catches your attention. And the interesting thing is that when we look at those businesses, they're run by some very sharp people. They're actually growing their market share versus the traditional managers.
He says as traditional managers tended to mimic the index but charge active fees, investors were now chasing passive alternative investments where fund managers genuinely invested their capital.
So you've got companies that are growing. They provide a very high upfront dividend yield because they have a structure that allows them to pay out pre-tax earnings.
He says US alternatives offered high single-digit dividends plus growth, and that should continue for the next 3 to 5 years. He said the second area they were also looking at was Macau.
Which might sound surprising, but basically you had a huge cyclical downturn in Macau in terms of gaming because of the crackdown on corruption. But what people probably weren't aware of is the fact that that market is evolving from bias and corruption to sort of family entertainment over a long period of time.
He says the family entertainment and mass market gaming industry was now underpinning earnings.
And the stocks are probably down 75, 85% from peak to trough. Which we think is a pretty attractive entry point.
He says it's a great source for growth as company valuations were heavily discounted and revenue was increasing.
We think over the next 3 to 5 years you could get a major transition to that market and also a major change in earnings power of those companies, and that'll play out in the stock prices.
Beyond investing in Macau and US alternatives, PM says they're now looking at new ideas. But they want to remind advisors clients should stay invested for the longer term, as that's when clients should receive above index returns.
We just want them to consider us as one of their 3 or 4 managers that are genuinely making investments. We basically see ourselves as global stock pickers from an Australian taxpayer's perspective. Have us there for the longer term because our investments play out over 5 to 10 years. So if you're going to benefit from what we do discover, you need to be with us for the full life cycle of that investment.